Vincent Strauss, you've been managing the Maggelan-Anlagefonds, an emerging market fund, for over 20 years now. What was the major event in the last 20 years when you were managing that fund?
I would say that 20 years ago, the consumer stocks in emerging markets were extremely cheap because investors were focusing their research on exporting companies. Emerging markets were supposed to be the workshop of the world. So basically, investors were buying the shares of the workshop, industrial stocks. As a result, consumer-related stocks were extremely cheap, in some cases selling at 5, 6, 7 times. And today, they move from extremely cheap to some overvaluation, in some cases over 30 times. So I believe that we got a fantastic re-rating, and we really enjoy that, but everything has a price.
Emerging markets have risen really very strong this year after the backdrop we had last year since the announcement of the Fed that we will, end the tapering. And, did this return of the emerging markets came as a surprise to you?
No, I believe that emerging markets, one has to be contrarian. When emerging markets when everyone is telling you you should invest in BRICS or such, I would say, marketing concept, get out and be careful. So it means that you have to be contrarian when the markets are weak. You have to increase the positions, because I believe that decoupling was a myth over the past 10 years, but it may become a reality for the next 10 years. So I believe that at some stage it makes sense for long-term minded investors to have some decent exposure into the emerging markets.
So exchange-traded funds, that's one of the major changes in the fund industry over the last couple of years. How will that challenge ETF your business in the next few years, especially in view of the emerging market funds?
I would say that it is maybe an opportunity because, to some extent, the biggest part of flows has been invested into ETF, or what I would describe passive style, which is more or less a sort of benchmark, which means that the few active investors at the end of the day can choose more easily, because investors are investing with the flows. But at the same time, it means that when a stock is overvalued, it may stay overvalued for a long time, provided you get inflows into the emerging markets. So it means that, of course, for us, we may have some risks of discrepancies between the indexes and the performance, but at the end of the day, I believe that the active management makes sense in emerging markets.
Vincent Strauss, thank you very much for your time.